Hello and welcome everyone to the Wall Street Blockchain Alliance's regular recurring policy update. Ron Quaranti here with my dear friends and our policy experts, Dina Ellis Rochkind and Adam Goldberg. Before we begin, our usual disclaimers, please keep in mind that nothing discussed is accounting, investment, legal, or tax advice. I am not a lobbyist. I don't think either of our guests are lobbyists. Maybe you are. Either way, but also please do keep in mind that everything discussed is our own personal opinion and did not necessarily reflect the opinion of our respective firms. With that, Dina, Adam, it's good to see you both. We've got a short period of time and lots to cover. Let's kick it off if we could. Spot ETH ETFs, and I saw the headlines over and over again, Dina. They were approved. It's a bit more complicated than that, but is this a kind of pivot point for Washington and its perspective on crypto? What happened? Dina, you want to start off?
I think it's still. I mean, and I am sometimes a lobbyist. I know people don't. It's part of what I do. I do a lot of other stuff, but I have a lot of lobbying experience, so I do have a background in that, and I do some. But I mean, I think it's no coincidence that FIT 21, the legislation that passed the House on a bipartisan basis, took place the same time that Gary Gensler was making the announcement of moving forward with ETH ETF. And I know there are some hurdles, and how many months that's going to take, I don't know. But if you think about FIT 21, one of the main things it is trying to do, without saying it, is say that ETH is not a security, right? I see this as a significant move, assuming that it happens and it doesn't take until the elections or like months and months and months for it to happen. And the reason I see it as significant is because Ethereum is the largest piece of infrastructure out there in terms of blockchain and in terms of Web3. And if it seems to me a step in the direction of saying, okay, we're going to start thinking more broadly about ETH and Ethereum. And I also think it's a way for the SEC to have a lot of control over the future of crypto and financial services and Web3.
Dean, Adam, weigh in on this. And the other thing that I learned, interestingly, Adam, let me ask this. Were you surprised at the quote-unquote SEC approval for spot ETH ETFs? And tell the audience what delegated authority means.
So I wasn't necessarily surprised. The timing, I think, is the most surprising, that it came relatively quickly. I think everyone kind of expected the SEC to continue to drag their feet as they had done for months and years with the Bitcoin ETFs and ETPs. I think the difference here, well, first off, I think the most profound thing is some of the language in the statement from the SEC that these are akin to commodity-based trust shares, which is the pre-existing approval for ETFs and ETPs on which the Ethereum approvals will rely on, which obviously doesn't fully settle the is ETH a commodity or is it a security, but obviously gives heavy evidence and indication in one direction. What it also might portend, which could have much more bigger implications outside of just this decision, is if there is some change into the regulatory posture of the administration. Previously, the administration had been very reluctant to incorporate crypto into the financial system. You had SAB 121, which made it very hard for traditional banks to keep it on their balance sheet from a custody perspective. You had guidance from the OCC that required pre-clearance for any OCC-related bank that wanted to participate in crypto or digital assets. If this is a pivot point and shows that the administration is kind of hearing, and as Dina pointed out, we saw robust activity in the House of Representatives where you saw the first major crypto legislation that would actually govern the way it would be regulated in the United States pass the House. You saw SAB 121, the repeal of that using the Congressional Review Act, pass both houses with a significant margin, even though the president's indicated he's going to veto that. Does all this legislative activity, especially on a bipartisan basis, portend that the administration is changing the way they think about crypto and digital assets, and are they becoming more open to it? That's going to be the huge thing we wait to see here. And just on your delegated authority point, the main thing is one of the things the House bill does that passed would basically make the Department of Commerce the chief regulator, because it's basically encouraging business activity, and really tell the SEC you have to stay in your lane, really only regulate securities, don't really address crypto and digital assets unless specifically directly in your purview. And that's kind of the authority Congress is delegating to the different agencies as to how they will interact with the space. I think both me and Dina could give our opinion on the jurisdiction. It's one of the reasons it likely won't go anywhere in the Senate. I don't think the Banking Committee or the Ag Committee is going to give up their jurisdiction over crypto and digital assets, but it's something to consider going forward.
Adam, thanks so much. Dina, weigh in on one thing if I could, and obviously, Adam, want to get your feedback on that as well. When we talk about delegated authority, and obviously I'm not an SEC expert, but this was passed without a vote of the commissioners. Is that correct?
That's correct, yes.
Is there a chance, however unlikely, that the commissioners could revoke this passing? I mean, for the lay person who doesn't understand how the sausage making happens in DC, particularly with regulators, is there that chance?
I mean, I think that here's what I think. I think it's unlikely, but I think it also gives, some of the commissioners over there that want this to happen, an ability to kind of put more pressure on Chair Gensler along. Now you've got the Hill and people internally, right, pushing, the chairman forward on, actually approving ETFs. I wanted to say one thing to Adam's comment, and this is my lobbyist cynical side of me, which is that the industry has very publicly announced that it is going to give $80 billion or more in campaign contributions, and that is and TradFi does it too. They just don't, I mean, I've been in two different companies. We never talked about it publicly because why would, I don't know. Anyway, so, we want to see this timing of everything, right? Because if you want that money to keep flowing, you want to move in a hopeful direction until you get to the elections. So, I mean, I think we have to keep that in mind, but I do feel very positive about the future because of the fact that the U.S. is feeling more comfortable and a level of control. You can see that with all of the TradFi companies getting into it.
Dina, thanks so much. And I just want to wrap up this particular topic because when we look at the ETH ETF approvals, I think it was Michael Novogratz, so shout out to the team over at Galaxy. And I'm going to paraphrase a bit, but he kind of commented that it seemed like someone in the Biden White House called up Congress and the regulators and said, ease up on some of this stuff. I guess the blanket question I would ask you both is this election year politics divining or controlling the narrative now of crypto? Adam, what do you think?
Well, first off, I think, and as Dina will tell you, everything is election year politics in an election year when we're talking about,
fair point,
right? Especially one of the things around SAB 121 is everyone was like, well, is Biden going to veto it? And the repeal of, and I was like, well, yes, most likely, because it's his regulator. If he didn't like the regulation, he could just tell Gensler to withdraw it. And if Gensler disagreed, he could just ask for Gensler's resignation. That's your power as the president. They are your head of your executive agencies, supposedly doing policy on your behalf that you agree with. If you don't agree with it, you can find someone else to put in that place who does agree with it or ask them to change it. So that's one thing to keep in mind. And what I used to tell people is one of the most important things that you could see is that the Biden team essentially didn't think this was a voting issue is because they hadn't made changes in policy on crypto and digital assets, which kind of tells you where they thought about it in their priority structure as to whether or not they thought it could impact the election. The fact that you are seeing changes both on the House level, legislative level, and now on the regulatory level does indicate there might be some changing in the guard of that view within the campaign and within the White House. Yeah. They seem to have made the judgment this is hurting them, and they want to blunt some of that impact. So that's why I said it could be a sea change where you could see them become much more friendly, at least as Dina said. Maybe that doesn't go through the election, but at least up until the election, if they think any of these regulatory steps Gensler or the other regulators have taken are hurting them politically, this is the kind of things you would tend to see that would change that narrative as they're trying to appeal to potential voters going into the fall.
Adam, thanks. Dina, do you think the calculus of what Adam and the three of us have been discussing in the past couple of weeks on SAB 120 and veto changes when you look at Senate Majority Leader Schumer's vote for the rescinding of SAB 121? And Adam, just to add on to that, you had mentioned one of the predictions I had made is that the SEC will withdraw SAB 121. I've got a steak lunch bet with David Brill. Shout out to our friend David. How likely is that? Dina, let's start with you.
Yeah, I mean, I think that, I think, well, first of all, with the Congressional Review Act, there are limitations to developing, let's say the rule was, let's say that it's not vetoed. There are restrictions that can be challenged in terms of going into a similar topic, right? So the thing, if it is vetoed, I think it's a timing thing. I don't think SAB 121, the way it exists today, will continue to exist. So it's about, I'm viewing like sort of Congress, the administration, they're kind of in different spaces in a way. All of them are interested in the $80 billion plus in campaign contributions. Let's be realistic here. And of course, I mean, the bill banning central bank digital currency, that has a lot of grassroots effort, support. People don't want the Fed controlling their lives, or they don't want the government like looking at all their, there's grassroots support certainly in parts of the country. Yeah. But I would say that when it comes to the administration, they know that they cannot, that crypto in some form or digital assets and blockchain and Web3, they know it's not going away. Yeah. And so they have been working for, in my personal opinion, for at least 2 years on feeling a level of control. And so you've got, that level of control is, that's why we've got so many traditional finance companies that have come into the space, right, that are regulated. You're talking about the future of financial services, but you're also talking about the future of the internet. And no matter what, the intersection with, if you're going to monetize the internet, there will be both a tech component to it and a financial services component. And we know that financial services is much more heavily regulated than technology is.
Dina, thanks. Adam, weigh in on this as well. And just tell me, am I going to lose my bet with David on the SAB 121?
Actually, no. I think there might be some possibility. I think the most important thing to know from what Dina said is the reason to potentially veto it, even if you were to eventually withdraw it, is if you don't veto it, you cannot put forward any kind of other custody rule around crypto and digital assets for an extended period of time under the CRA. They likely don't want to tie their hands from a regulatory perspective like that. But what you could see is them veto the repeal of the CRA, but then move forward with the staff accounting bulletin, have a new one that is updated, less onerous, that essentially withdraws the previous guidance, right, and gives a more industry-friendly point of view. It seems the original thinking behind SAB 21 is they saw all of the traditional players in finance rush into the crypto custody space. They saw BNY Mellon made an announcement. NASDAQ was going to become a custody agent. You had a lot of these traditional firms, and I think what they thought was, this is going too fast. We don't want to bring all of this risk into the financial system, which, again, according to them, this is how they view it. Importing the systemic risk into the traditional financial system, they kind of like to keep it in the kind of crypto digital asset industry right now, Coinbase being the biggest custody agent, for example. Yeah. If you had someone like BNY Mellon, which is the biggest custody agent in the world, then come in and be the digital custody agent, likely they would become the biggest digital custody agent. And this effectively prevents them from doing that. So I do think that, yes, you could see it withdrawn. And again, it really comes down to, is this a pivot point or is this a one-off in response to the DC Circuit opinion, which was the whole reason that the Bitcoin ETFs got approved? Gensler keeps saying that. When you hear him talk about this stuff, he's like, we got an adverse court precedent. We're responding to the court precedent. We don't really think we have. And I think one thing to note when we're talking about approved, these ETFs and ETPs are not approved yet. What they asked them to do, they approved the updating of the exchange books, basically the rules that govern the different exchanges that would list the ETFs, and said basically make the changes you need to make to allow you to list them. They still need to approve the individual filings, which likely what they will do in the coming weeks and months is something like they did with the Bitcoin approval, which is have one blanket approval that approves all the pending applications with a similar rationale. But it's just one quirk to note here. They aren't approved in trading yet, and that's the reason it's kind of a two-step. Update the rule books, then update the S1s.
Go ahead, Dina.
I mean, it's very possible that what is done is there's a veto, right, and a statement that's made at the same time saying, we're vetoing it, but realize that we need to make changes to this. And going forward, we look forward to working with Congress and whoever else, like, to coming up with a new rule. You could have something like that come out. I don't, as I said, I don't think it's a static. I think they wanted to keep it out. I don't think they were worried about Bank of New York Mellon. I think that I think those large companies, like, you know, I don't want to name too many companies, but these large companies like JP and BlackRock and Bank of New York Mellon, I don't think they would have gotten into this space without some administration involvement, just because of the way that they're regulated. I mean, the large banks have people like, they have their examiners living in their offices. So let's be, you know, I'm very realistic. I think they were more worried about like, you know, public companies that are, they're more worried about some of the, like, the partnerships with some of the banks that were, you know, kind of specialized in, you know, fintech partnerships. And I think they were worried about bank failures, like, you know, like your Silicon Valley Bank or your First. So that's, I think that was more of the target than our large institutions. But as you saw, like, we have some vulnerability in the banking system. That's much bigger than just crypto, but they didn't want that getting into the system.
Dina, Adam, thank you both so much. For everyone in the audience, thank you again for joining us. If you've got questions for Dina or Adam, if you're on LinkedIn Live or if you're on X, please put them in the comments. I'm sure they'd be happy to address it. Dina, Adam, I want to put my cynics hat on. And again, you guys have forgotten more about politics than I know. But when we look at, the three of us have been in the crypto space long enough to remember when politicians were saying, it's only for drug dealers, it's not a significant market size. When you look at election politics now, and when you look at, it's presumably President Biden versus Trump in the coming presidential election, it, you know, slices of a percentage point in voter base matter. Do you think some of that's coming into play here as well? For a long time, it was the crypto voting block, no one cares. And now it's, yeah, no, there's actually a bunch of people who might care. Is that also the political calculation?
Yeah. And again, one of my main theories, and I told people as the reason why I didn't think it was a critical voting block that people would pay attention to, is because you had not seen those changes in policy that you would have expected if they did think it was a key voting block. For example, you saw them reschedule marijuana. Obviously, that is an appeal to potentially to young voters and other people. Typically, you see those policy steps as you get closer to an election, because that's one of the powers of incumbency. You have the ability to deliver key wins within the regulatory system that are solely within your control as president, that you can then give out to specific demographic and voter groups and say, please vote for me. I did this for you. Isn't it important that you continue to back us?
Right.
It had started to become a very political issue, with it seeming that former President Trump, the GOP nominee, was embracing crypto more. He's done a bunch of different NFTs. He said he's very open to crypto. He's made different steps in that direction. Whether or not that would actually come to pass, obviously his administration wasn't super friendly to it when he was in power.
Right.
So we don't know, or if it's a campaign issue. But I think what you're seeing is the Biden administration similarly responding kind. But one thing I want to note on something you said previously, which was Schumer's support of the repeal.
Yeah.
The most notable thing I think will come out of that repeal is the 60-vote coalition for a pro-crypto or digital asset bill. There were 60 votes for that repeal. Now, they may not line up evenly for an eventual crypto digital asset path, but that path to 60 is actually how you will get legislation in this space.
But
And the fact that you have a coalition that has 60 votes is very important going forward.
Dina, go. Thank you.
Yeah, I was going to say the reason that they got the 60 votes, and we can go back to the constituency issue because I do think it is playing a role, but the reason that they got the 60 votes was because traditional finance was also, it affected them as well. And so they were lobbying the Hill along with the crypto industry. So that's a much more powerful, and they were on the, they're not always on the same page. When you've got them all like lobbying together, you're going to have a larger impact. So for Schumer, it's like, first of all, he's in leadership, right? So again, we've got the 80 billion that we've talked about plus, but it's also he's got Wall Street in his backyard, right? And all of a sudden traditional finance is lobbying this as well. So that's why you get the 60. On the constituency, I will say that this issue, I think, especially like the central bank digital currency one, there is the, you want to get young people out to vote, and they tend to vote Democrat versus, and nobody's very excited about this election. So that's a way to potentially get out the vote. I mean, I don't know if anyone saw the story about the grayscale, the Harris poll that shows like a third of, and I don't know it's always who paid for it, but let's assume there's some truth to it. That's a strong message. So I do think there's some politics in it, and there are voting blocks that this may be an issue for them that are young.
We've got still so much to cover. We've got under 10 minutes. Let me ask my provocative question of this live stream. For a long time, people have been saying Senator Warren controls the financial and economic policy of the administration. I don't know how true that is, but if that were true, is this kind of a loosening of Senator Warren's grip on this kind of policy?
I'll answer it I think I can do it pretty concisely. So
go for it.
I don't think that, so the reason the Trump administration was in the same spot as the Biden administration, right? So let's be realistic here about the issue is, and it's not going to go away, especially with everything that's going on geopolitically. The issue is national security. National security. It's not just AML and KYC. It's like, who is controlling the future of financial services? But it's bigger than that. And Ron, you and I have talked about it. It's also who is controlling the next version of the internet, which is Web3. So I think a lot of this will play out. I will say that the vote last week, combined with the SEC announcement, it was like both sides of the aisle won. Both had good news. Both was like, so I was like, oh, this is good for both sides of the aisle in terms of, moving the ball forward, substantively, but also just definitely good for and fundraising and getting in voters.
Yep. Dina, thanks. Adam, we've got to move forward. We've got to cover Fit 21. We referenced it a bit earlier. For the audience, can you broadly describe what Fit 21 was? And again, were you surprised at the kind of a bipartisan work there? And why did Chair Gensler push back on it so hard?
Well, the second part's easier because basically the whole goal of the legislation was essentially to strip the SEC of most of its role in regulating crypto and digital assets. So not surprising that the chair of the SEC would push back on any bill that would strip his own jurisdiction. Yep. And as Dina knows, that's likely the reason the bill won't make it through the Senate is no one on the banking committee is going to want to give up their jurisdiction over crypto and digital assets and give it over to the Commerce Committee. One of the reasons for that is the campaign contributions, Dina said. If you don't sit on the committee that has the regulator, you don't get the contributions. It's the same reason that the Agriculture Committee will never give up jurisdiction of the CFTC. It's because one of the reasons people want to be on the Agriculture Committee is to get all that finance money that has to do with derivatives and CFTC regulation. If you took that away, it becomes really just a traditional farming committee like you have in the House more. So that's one of the reasons. On the bill itself, I think what's notable is it actually does put forward a regulatory framework for the United States related to crypto and digital assets. It does try to draw the line between certain major ones as to whether or not they're a security or a commodity. It also, as I said, empowers the Secretary of Commerce to really take over the regulatory structure for this, similar in a way that the CHIPS Act did, really empowering the Commerce Secretary to move forward. And the reason for that is they're trying to house it more as a financial innovation bill, like the AI regulations or the incentive of chip creation in the CHIPS Act. And that's why you would want the Commerce Secretary, because it's their job is to promote American business and leadership globally. So that was one of the main goals of the bill. But as I said, I wasn't surprised because there is obviously House is a majoritarian institution. It could put forward whatever it wants. You assume if they put a bill on the floor, the majority supports it. You did have a significant number of crypto-friendly Democrats in the House. You got that number. The question is, it's always good to get something passed because you have a starting point. So we know this can pass. Can we build on it? Can we make the modifications necessary? But the key will be, can you hold that 60-vote coalition for the SAB repeal for whatever legislation is eventually going to come setting the rules of the road? Because at the end of the day, the Senate really writes these rules only because you need to come to consensus and get 60 votes.
Adam, thanks. Dina, weigh in on what Adam commented. And what I would ask you as well, the industry for a long time has asked for the clarity of whether or not something is a security or a commodity in the crypto space. Will the Senate sacrifice that clarity for the sake of some of the things that Adam spoke about?
I don't see the Senate passing this legislation. I look at this differently. First of all, in terms of the Commerce Committee, this is a long-standing battle that goes back to the days when I worked on Graham Leach Bliley, and there was a battle between Oxley and Bliley about who was going to have jurisdiction over what. And it was, or who was going to be the chair of the Commerce Committee, which was much more powerful back then. So my educated guess is, and this is technology, right? My educated guess is that the Commerce Committee likely wanted that language included in the legislation. I don't know firsthand, but if I were them, I would. In fact, I would have started. They'd gotten legislation passed, I think the week before, a couple pieces of legislation on blockchain. So I'm not shocked. And them being involved is not a good thing for maybe the committee. If I was still there, I would be like, but it's not a bad thing for the industry overall. In terms of the SEC versus the rest of the administration, I worked in the Treasury Department, and my experience was, even though you have independent agencies, it's pretty well coordinated. Not the enforcement actions, but this is all coordinated. So I've seen this movie before. When I worked on the Jumpstart Our Business Startups Act, the night before the bill was coming to the Senate floor, we had support from President Obama, but the SEC sent up a letter, a detailed letter, like the one that was sent up about this, a detailed letter opposing the legislation. So this is a sort of kind of play different sides of it. Yeah. In terms of the legislation itself, I think that having read over it a couple times, and I don't claim to be a securities lawyer or a CFTC lawyer, but I do look at legislation of all different kinds all the time, and there's a lot of joint rulemaking in there between the CFTC and SEC, and that in itself is how's this ever going to get done? When's it going to get done? So I think
you're bringing back memories of Dodd-Frank for me, Dina.
Right. So there's a lot of room in here, and the industry doesn't fully support it. It is very focused on kind of the builders and the validators. Mainly, if you look at sort of the numbers and the timing and everything, in the ETH space.
Yep,
it's important because it's pushing along the process.
Yep.
But we don't know how it's going to actually. I don't know how it would exactly work, and maybe that would depend on which administration, who's chair of what. So
we've got less than a minute, and I know we haven't covered everything we want to cover. We'll go for a longer format. We're doing this every 2 weeks. Thank you, everyone, who joined us. I want to throw one thing out there: the anti-quote-unquote anti-CBDC bill. Adam, I want to start with you, and we got to keep it tight. And then Dina, certainly get your perspectives. Is this the battle lines between those who are worried about technology like blockchain and crypto being used as quote unquote tools of the surveillance state versus those who are looking for the government's involvement in people's financial lives on a day-to-day basis more deeply? Or is this just a red herring?
I'm more in the third camp. I mean, the Fed and the administration are never going to give up the ability to launch a CBDC if they think it's the right move for the US dollar. The most thing the U.S. is concerned about from a government treasury perspective is that the dollar remains the reserve currency of the world. And if they make the determination that having a digital dollar is the way to keep the dollar's dominance, they will do that. I know Trump has said if he were to win that he would sign this bill and he would give away that power. I'm always skeptical when any politician tells you they're going to give away power,
Yeah.
It's much easier to say you're going to give away power on the campaign trail than give up the power once you have it.
Yeah.
And just that's why I'm more in the red herring camp, because again, it might be decades from now that we eventually get to the point where the Fed launches a CBDC. But if it becomes in the competitive advantage of the U.S. to do that, they're going to do that, and we're going to allow legislation to stop that.
Adam,
process.
thanks so much. Dina, wrap us up. You and I've chatted about national security. We certainly chatted about the dollar as reserve currency. Where do you see the anti-CBDC bill going?
So I don't see it I don't see it passing. I think there is a concern and definitely it has 165 Republicans. I don't think any Democrats co-sponsored the legislation. It was a bill that I happen to like. I'm sympathetic to it, to the bill, but it was it's Tom Emmer's bill. He's the majority. He's the majority whip in Congress. But I do think there's a grass movement that we're, in certain parts of the country where people don't want the government in their lives. And the idea that the government would be able to somehow look into your bank account and see how you're spending money or whatever I think that this is sort of it's an issue that the industry likes, but it's also an issue where you get, grassroots movements from it.
Yep.
And in terms of, I look at this pragmatically too.
Yeah.
Let me
got
say
10
this real quick.
seconds.
Okay, pragmatically. Look at how long it took to develop FedNow. Okay, the U.S. moves more money than anyone else in the world. The U.S. government doesn't. Most of us, I'll speak as myself as a former government worker for a lot of years. We really need input from the private sector to know what we're doing.
Yeah.
And so I just don't see it happening anytime soon. And Jay Powell has said the same. And if it does happen, it might be like a decade, and we might not even be calling it central bank digital currency. By that time.
Dina, Adam, thank you both so much. For everyone in the audience, again, we're slightly over. As I've told Dina and Adam over and over again, and I'll share with everyone out there, I could talk to these two for another 2 hours. We'll go longer next time. There's always going to be stuff to cover. We'll be back in 2 weeks. Dina, Adam, thank you both so much. We'll chat again soon. And for everyone in the audience, thank you for being part of it. See you next time. Bye-bye.
Thank you, Ron.
Take care.